Hello everyone and welcome to my morning report analysis videos on Thursday the 9th of March with me, Rich Perry, market analyst at Handset Markets. It's ECB day today, so the market's going to be focusing on the ECB rates decision at 12:45 and also Mario Draghi's press conference at 1:30. Just a little bit before I get that, the ongoing dollar strength is continuing through the market really, and we're seeing this sort of coming about with the treasury yields, which are pushing ever higher. We had a very strong ADP employment report yesterday, which sort of sets us up nicely for payrolls on Friday. Strong payrolls report. I mean, the absolutely nailed on rate hike now for March, according to Bloomberg, 100% probability. So markets are massively factoring this in, and you can see the 2-year treasury yield sort of pushing higher again today. On the 10-year as well, we're seeing that push to 2017 high, although just still below that December peak of 264, but still very strong on the US Treasury yield there, and the dollar has subsequently sort of picked up again. Euro is basically flat in front of the ECB, nothing too significant in terms of direction, although there is direction on the dollar today, dollar yen being the prime example there of the dollar strength, and I'll talk about that chart in a bit. But also you see gold and silver lower, silver being my chart today. But generally speaking, the euro is sort of supported today in front of the ECB. Markets will be not looking for a rates decision, any change there from the ECB. However, what we are looking out for is Draghi to possibly have some sort of marginal hawkish shift in his opinion on inflation. Certainly inflation being pushing towards that 2% target, which is the ECB's mandate on the headline, and it'll be interesting to see whether the ECB is actually starting to think about sort of tapering asset purchases. So that will be the focus, I think, for the press conference this afternoon. Other than that, you've not got a great deal impacting the markets today. Weekly jobless claims down here at 235, up from 223, but still very strong employment data, and all helps to support the rate hike argument. So my chart of the day is silver. And silver and gold have both sharply now corrected. Silver was in this uptrend channel. I was sort of calling this uptrend channel higher, but then it suddenly there was a significant change in expectation of a rate hike from all those Fed members that came out last week, and just one after another just bashed out the drum of rate hikes at the next meeting, and subsequently the market has really changed tack on silver and gold. Silver sharply dropping below this uptrend channel. The uptrend channel width is about 95 cents, so you project that downwards to the breakdown, and that gives you around about 1670, I think it is 1675. So you're not a million miles away from that, but you have broken below also the old breakout support, which was a pivot actually at 1725. So that old resistance became supportive, but that's now broken back below that, so that's negative, and that sort of reopens this reaction low here at 1659, which was the February low. But look at these momentum indicators. MACD lines sharply accelerating lower, stochastics straight into bearish, strong bearish configuration, and the RSI below 40. So it all sort of suggests that we're struggling now on the silver price. Now I'll sort of zoom out here a bit, because you can see every time you get these sort of MACD crossovers, they do tend to work pretty well. Certainly the ones in the bear configuration anyway, and again we're seeing that one, so we could see some momentum really shifting to the downside. Also, every time we see the RSI sort of below 50, it also then tends to go towards 30. So again, we've got downside potential, 37 on the RSI. So I think 1659 could well be seen in due course. Now this the other argument is that this 89-day moving average time and time again has been the basis of support, and rolling over becomes the basis of resistance. It's now bang on 1706, so 1717 at the moment, so we're sort of within 1% of that level now, and close to it. So you've actually hit that level pretty much not far off today. Can't get the crosshairs on it annoyingly, but today's trading has been not far off at 1710 is the day low today. So that key support of the 89-day moving average is under pressure, and a breakdown of that would just confirm the bearish outlook. That would take you also below all the moving averages. So we are looking at selling into strength on silver. You've got this downtrend on the hourly chart. 1725 is the initial breakdown, but you sort of can see it between 1725 and 1760 on this chart. But you can sort of tighten that a little bit, I think, as well. Tighten that a little bit with the sort of old levels here, old supports there from sort of 1750. So 1725 to 1750, excellent sort of selling zone, I think, now on silver. And it certainly looks as though the market is under pressure and pushing lower. So with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.